So I know we touched on this topic before. I mean, we kind of touched on it, but we didn't go into detail. But I want to talk more about revenue streams in this lesson. So we're going to talk about all the different ways you can collect money for your clients in assisted living. So assisted living facilities can receive payments through various sources to cover the cost and care of the services provided, which we talked about before in this presentation. We'll do a deeper dive. One is private pay. So that's when the client pays you directly from their bank account, or their family will come together and they'll put money in an account and they'll pay you. That's just private pay. That's like you have any tenant. Then you have other, ways such as long-term care insurance. Now, how that works is at some point in the past, before the client got too old to not really apply, they will have long-term care insurance. It's just like car insurance or home insurance. So just in case they ever need a facility like assisted living or any kind of long-term care, the insurance will cover it. They'll cover it to a certain amount. Some is 3,000, some is 4,000, some is 5,000, depending on the level of long-term care insurance they have. Now, if you accept long-term care insurance, and just like any other kind of structured payments through any other entities, they're going to have some stipulations. Like some long-term care insurances, they'll only pay ALFs, which is assisted living facilities, if you have a sprinkler system or if you have a private bed, or they all have different insurances have their different stipulations where they'll pay you. But normally it's a stable source of income. Once they're in, they pay you directly each month, direct deposit, and you just bill. It's great. And even if you have like ad hoc services like we talked about before, they'll even cover some of those ad hoc services. Other one is some clients can get reverse mortgages, which I've dealt with before. So, and it's another avenue where you can partner with, a person, and they can actually, feed you business, and then you can feed them business. So, I gave you the scenario before about Ms. Jones. She slipped and fell. She went to a nursing home. So I'll back it up. We'll talk about it again. So say you have Ms. Johnson, she slips and falls. She lives at home. She slips and falls. She goes to the hospital. The hospital said you need to go to a nursing and rehab facility. Then from there, the nursing and rehab facility say, well, it's not really safe for you to go home by yourself. Why don't you go to an assisted living facility? They send her to an assisted living facility to live. Her family tours, they agree on it. Then they're looking at, okay, well, how are we going to pay this? Do they want to pay private pay? They don't have long-term care insurance, but they own a house that they've had since the 40s or 50s, 60s, that they own free and clear. They can then get a reverse mortgage where, they'll get a mortgage on the house. They don't have any payments, but when the house is ready to sell or they pass on, that mortgage can either go to the bank, or the family can settle it some kind of way. I don't know all the details, but you can also partner with reverse mortgage companies and then refer them to these companies. The companies can then give you a referral fee. And then in turn, if they ever get any clients that may need assisted living in your area, they can refer them to you. So banks are mortgage lenders that service reverse mortgages. It should be one of your contacts in your Rolodex to have partnership agreements with them with your facility, because you can get paid for referral, even if the person doesn't even use your assisted living facility. Say if they like another facility that's closer to their son's house, and you refer them to the company to do reverse mortgage, then they can give you that mortgage company will still give you a referral fee. So going back to the original point, if you have a client, she likes your facility, she moves in, you can refer them to a place to do a company that does reverse mortgages. They can then take a line of credit out on their house, a reverse mortgage out on their house, and they can pay you monthly through that reverse mortgage. And it's just like getting cash, or they'll direct deposit it. It's completely safe, and it's a good way to get A, referral, and B, your money's just sitting in an account. They'll never likely be late. With private pays, that's the risk you run. Family might not have it that month, and normally it's not a problem because they know if you go through procedures to put them out, they now won't have anywhere else to go. So but it does happen. Reverse mortgage is a little more safer because they have that money just sitting somewhere as long as family doesn't use it for anything. But they can have reverse mortgage set up where they pay you directly from an account. So bridge loans, short-term bridge loans can be used to cover costs while waiting for other forms of payments to be processed. So that person can get a bridge loan, or you can get a bridge loan. You can even get a bridge loan for your business. I've done bridge loans before. So we'll just take it to the business aspect of like, if you want to start an assisted living facility. So I want to start a facility. I have then did my business plan. I see that I want to purchase this facility. The facility, let's say it's $1 million. Let's say my down payment is 20%, which is $200,000. I can go to a bank and say, all right, well, I want to build in $1 million assisted living facility. They're going to say, okay, well, do you have the $200,000 to put down? And they'll look at my account, they'll see, okay, you do or you don't have it. It doesn't matter, but you don't actually have to use your own money. You can go somewhere and get a bridge loan to actually cover your expenses, cover that loan and your expenses. So you can go to an investor or another bank or a smaller bank and say, hey, I have this business plan that's very robust, and they'll look at it and they'll say, wow, this is amazing. And you'll say, all right, well, I don't need you I don't need you to finance the whole project. I just need a bridge loan. I need a bridge loan of $200,000. Well, sometimes I have a client now that's doing $20,000 bridge loan. She's doing a facility, she's doing $20,000. And they'll give you the money. It'll be its own terms. It'll have its own leverage. And then you can use that money instead of using your own money to actually finance it. Clients can get these too. It's kind of rare because it's shorter term and they want kind of longer term money to pay rent. But bridge loans can actually benefit you a lot when you're actually starting a facility. I've used them, and just depends on your network, which is also important why you network, because you need to have a network of strong people that can say, okay, well, oh, I know this person's giving out money, or I know this person's giving out money. And that's another thing I'll do. If you guys need help finding these sources, if you reach out to me, I will also send you my resources as well, who I do my loans with, and hopefully they can help you out as well. Let's see. And then grants and scholarship. So you can do the same way you apply for a loan, you can apply for grants. I had a client, I'll try to screenshot a picture of the grant that we got, but I helped her get a $300,000 grant to start her assisted living facility. And they have the funds are out here. So, and normally it's neighborhood driven. So you just find a neighborhood where they may need a community development. They have money in a kitty for community development. They have money in a kitty for jobs and growth opportunities. You just have to know how to word these grants to say, okay, I'm going to fill the gap for this. So say, and if you have more than one way to fill a gap, that's when you're more likely to get the grant. So for example, for my client, it was a neighborhood where it needed to be a community development grant, and they wanted to bring jobs in. So if we find a house that needs to be renovated, that's community development, because you're now taking a house that is now blighted and you're renovating it. So that's helping the community. Then we're bringing jobs. So you say you're going to hire, and you're going to look to hire from that community first. So you make that pledge, and you can put that in your business plan and in your grant proposal. You can say, hey, we're going to look in this neighborhood first to hire. So not only are you bringing a house, from dilapidation to in the neighborhood to actually being renovated, now it's a business, and now you're offering people in the neighborhood jobs. So you're helping families out in that area. So it's a lot of money out here for grants. I mean, and a lot of people just don't know where to look. Something I can help you with as well. we can help you find grants as well. But it's very important before you start diving in your pockets, especially if you have time. Like, it's no rush to do it. If you're looking at doing an assisted living facility, I suggest like you start looking for things like this first. You start with your business plan. You start looking for ways to like use OPM, which is other people's money. And then one of my mentors, an investor, told me that a long time ago. You know, he was a millionaire, and I was like, no, he's like always getting like investors and loans, and he said, I'm not using my own money. And this man had hundreds of millions of dollars. And he said, just tell me like OPM, I use OPM. And he was able, and of course he would take money, his own money to put down payments down. He would give his own self bridge loans for his own projects. So it's like other people are putting up the bulk of the money. He's just putting up a small percentage, but it's his business and he's like now running it and operating it. He may have investors that he has to pay, but you can scale quicker. So in assisted living, if you have your policies and procedures and your business plan and everything in order, go out and search for money. And then you can then scale it and use other people's money. Yeah, if you have partners and investors, you may not make as much money in the long term. I mean, but when you're scaling, you'll make more money than you can possibly think about making from just a scale point of view. You can have them in different states. If your policies and procedures and everything is airtight, you can run this in multiple states and it won't be a problem. You just know what to do when you're hiring people, what to do, what to look for in your managers. And we'll talk about that in a little bit, but I don't want to get too ahead of myself. But your personal care contracts. Some residents and their families choose to enter into a personal care contract where a family member or friend provides care service in exchange for compensation. So that's not really applicable for assisted living, but it's one of the terms you may have to think about. I wouldn't have a family member necessarily going and working in a facility, but you'll see that when you may have what I have done that makes this applicable. You can actually have a family member come in and say, well, I don't have $6,000 a month, but can I pay you $5,500 and I'll come take their laundry, or I'll provide their food, or I'll do certain things every month. And you may say, okay, well, that takes a load off of your staff. And then you can work out some kind of arrangement with that. And then but make sure you put that in the contract, because if it's a handshake agreement, they can say it and that client will move in. And then you'll have no recourse to say, oh, you're not living up to your end of the bargain, so then you can charge them the difference. And when you're writing up these agreements, you always in the contract, in the resident agreement, you write your regular price. So if your price is $6,000, you write $6,000. Then you discount, say, well, I'm going to discount $500 if you then do these tasks. And that holds them accountable, because if they don't do it, they owe you the full $6,000. So it's just ways to protect yourself when doing things like this. I've done it a few times. It's never really backfired in my face. I mean, you have some people that's going to want to do things for their family members anyway, because like you have some family members that never really come and check on their family, but then you have some family members that are like, they're part of the family. They're there like every day, they're helping out, they're working with their mother or father. So you may as well, if you have those people, they're going to take the load off of your staff. You can write it up in the contract and then kind of give them incentive to come in and like say, okay, they're working for their mother or father and helping them out, and in exchange, you're saving them some money. So this is a way to get like, some incentives. I want to say like 2 or 3 clients have done this in the past. So then we talk about Medicaid. Medicaid is a state and federally funded program that provides financial assistance to low-income individuals who require long-term care. Not all ALFs accept Medicaid, and they have a specific licenses and limitations. So they have specific requirements and limitations. So Medicaid is when, I call it the Section 8 for assisted living. That's, what I really tell my clients to make them understand. It's pretty much below income clients, and you can get paid good money. Like Medicaid waiver pays. Now they just did a rate increase as of July 2023, which is now that you can get paid $3,400 a month. I want to say I'll try to find it and put it in here at some point. that you can get paid up to $3,400 a month from Medicaid, which is a lot. When you're talking about some states, especially when if you have it in a low income area. So some people get homes in like lower income areas and they do Medicaid and they make a lot of money because you can then your expenses are low, but then you're making a good chunk of money from Medicaid. But what you have to do is once you get licensed, is a whole different licensing procedure to apply to be a Medicare provider. So you have to get your regular license, and then on top of that, you have to apply, and they'll come in, they'll have their own inspectors, they'll come in. It's just like Section 8. They'll send their own people in, they'll give you their clients, excuse me, they'll refer people to you. But I love it. All my homes have been waiver approved. And you can pick and choose which ones you want, because sometimes when you're dealing with that demographic, it comes with certain things, just like Section 8. But normally you have you can interview the people, and they'll say, okay, we have a person, you go interview them, and you sit down and do your interview, and you talk to them, and you do your assessment. You're like, this person's actually cool. Like, I like to have them in my facility and get paid $3,400 a month. And then with Medicaid, you can also do like the ancillary billing we were talking about. So Medicaid will actually pay for the shower beds, the transportation to doctor's appointments, and things like that. So different ways you can, help the client out, which will save you money as well. And then we'll talk about Medicare. Medicare generally doesn't cover the cost of assisted living. However, some limited home health care services may be covered. So this is interesting as well. Yes, it doesn't cover the assisted living directly, but you could have a client that's in your facility that may come in and they may need occupational and physical therapy, and or they may have visiting doctors, and you can bill their Medicare for it. So you can have ancillary services come in to support this client that then makes your facility run better. So it takes the load off your staff if they have extra services that you're not paying for that's coming in to care for that client. So it ends up working out for you in the long run. So I would always say if this client needs more work or more help, always check with their doctor to see if you can get them to write a prescription for any ancillary services, and they'll come out and do it because Medicare will pay for it. So that's always something to look for when you have when you have a client with Medicaid. Veterans benefits. So, excuse me. Veterans Administration benefits. So this is more of like a supplementary service. The VA, I think now they pay $1,700 a month on top of what the client pays. So imagine if you have a client that's a veteran, you always ask this, because sometimes I've had people that have had veterans in their facility, they never asked, they never thought about it, and they missing out on an extra $1,700 a month. So if you have a client that has Medicare, that's a private pay, they were a veteran, and all they need is a copy of their discharge form to say they were honorably discharged, and they pay $5,000 a month. You can go to the VA and say, oh, I want to apply for aid in attendance, and they'll approve the person if they were honorably discharged. And on top of that $5,000 a month, they'll give you an additional $1,700, $1,700 a month on top of that. So that's just money. So even if you have a client that say they can't quite cover it, but they're a veteran, you can still make up the difference with the VA, and they direct deposit that directly into the account, and it's easy to sign up for and bill for. But then you have your home care and community-based services. Those are Medicaid services. So we already talked about that. That's like the waiver program. So that's the actually official name for Medicaid. It's called, Medicaid waiver. So, you bill daily. So, you have the client in your facility, you'll bill Medicaid daily, and they'll pay you, and it'll be up to about $3,400 a month, depending on what state you're in. And but that's what it's called. It's called home and community-based services. Supplemental security income, SSI. So normally that's not a lot, but it's more of a supplementary service where they will pay you a certain amount, and then if all they have is Social Security, then they're going to apply. Then if they're going to be Medicaid waiver approved. So out of that, maybe you'll bill for Medicaid waiver and get your $3,400 net a month, and then you will get this supplemental security income from SSI. So you'll end up getting a little more. It's like $700-800 more a month from them, and they do the math depending on what the client has coming in, where you have to give them a stipend, a monthly stipend that they can use to spend as an allowance. So normally it's like $71 a month, and then the rest they pay you. And it ends up being a little more, close to like $4,000 that you'll get from the waiver program and supplemental security. But it's different everywhere. I don't want to give specific numbers, but those are rough numbers where, you know, you will be right around if you have someone that's waiver. And if you're waiver, then they're more than likely 100% is going to have supplemental security income. Then going to the next one, the state subsidy program, which a lot of people don't think to apply for too. So the person's getting $3,300 a month for Medicaid waiver, plus you're getting another $700 minus the allowance that you're giving them. So you're close to $4,100. And then because they're low income, you can apply for other subsidies, such as food stamps, transportation, free transportation. So this is all things that's going to save you money. And the food stamps, you can use it for the whole house, but it can be their food personally. So let's say if they have snacks, they can have their own snacks. You can really order stuff using their stuff, their money, and they can have their own stuff, which saves you money from having to pay out of your pocket for this specific person. Even if they're eating all the same things, you can allocate this from like their portion of the bill. And then as long as you have everything documented saying this portion is going to them, it came out of their money and they agree, you're perfectly fine with doing that.